In this video, traders, we're going to look at the moving average crossover pullback strategy, 1 hour chart, currency pairs. Stay tuned. Hey traders and investors, a very warm welcome to you. Okay, so this is a trend trade family type setup and it's used on a 1 hour chart. Now you can use it on FX pairs or you could use it on indices, commodities, or really high market cap stocks, your Apples, your Teslas, your Netflix, that kind of stuff. The point with this is we're looking to get on a trend, a moving average crossover at the sweetest spot. The problem with the moving average crossover trade, as we know if you tried it, is it's very lagging often. Often you're going to get the moving average crossover. By the time you get it, if you've got a reasonably smooth moving average at a higher number to eliminate the noise, you're going to be quite late in the move. You're going to be chasing it. You might have to sit through pullbacks. If you have a shorter term moving average, you're going to get loads and loads of signals. Those are the problems. So how do we overcome that problem? Let's add another layer in. Let's wait for the confirmation or the filter of the moving average crossover. Then let's wait for a pullback. And then let's use another indicator to time that pullback to take the trade. And that's exactly what we do here. Okay, so 1 hour chart. Try it on a higher time frame if you like. I think a lower time frame might be too noisy. Maybe a daily it would work. Let me know your thoughts in the comment section below. Let me know if you've tested it out. Okay, we're using a 100 period SMA, and I need to put some colors on here so you guys know what we're talking about. The 100 period here is going to be in red, and the 200 period is going to be in green. Obviously, the higher the number, the slower the moving average, but the less noise. We know the score with moving averages. If you don't understand moving averages or you're just kind of learning, go and check out the other moving average video I've done on the channel. Okay, so what do? We are looking for, these are the rules. I'm going to need an RSI, by the way, sorry guys, on a 14 setting. The rules are when the 100 period SMA crosses above the 200 SMA, so the cross, not just being above, but waiting for the cross. So here we go, here's a great example. That's priced there in black. The 100 SMA is in red, the 200 is in green, the RSI is below in black as well. So when we get the cross, so this is the cross here, let me go with a black pen. There's our crossing point here. The 100 is crossing above the 200 SMA. That's the first part of the filter. We then go long when subsequently RSI moves up from oversold. Now oversold is usually going to be 25 and 75. Oversold is going to be 25, overbought is going to be 75, could be 30, could be 70. Adjust it and have a little play and see the numbers that suit you. Don't go overboard with going crazy trying to adjust it because you'll go mad. But just, you know, have a little play around and adjust it to your market if you see fit. Otherwise, just stick with the 25, 75. So we have the crossover. Price then is rallying and it pulls back. So really this is what we're looking for. The first kind of pullback, we get the oversold condition. Great, that's the second trigger, a second filter. Now the trigger to take the entry is when we cross back above oversold condition into neutral territory. Then we go long, there's our long position. So really we're waiting to see that the trend has started. We're hoping the trend is started by the moving average crossover signal. We're not then chasing or waiting for a pullback. When the pullback comes, great, that's gonna hopefully put RSI into oversold. If it does, it's a decent pullback, great. Then we're going to wait until the pullback continues up again, which is where we get the actual trigger, and the trigger comes from it pulling back from 25 back into neutral territory. By the way, if we're going short, what are we doing? We're flipping on its head. Just for clarity, guys, it's when the 100 SMA is crossing below the 200, and we're going short when the RSI, so the price is going down, starts to pull back, RSI goes into overbought territory, which is 75. We then trigger when we come down from overbought territory into neutral territory. We take a short. Okay, stop ideas and target ideas are try a fixed one, 100 pip stop, 200 pip target, or use an ATR, like a 3 times ATR as a stop and a 6 times ATR as your target. Otherwise, you can play around and mess around with kind of support levels, resistance levels. But if you kind of want to try it out on a demo and just sort of mess around and see how it's going before you allocate your capital, which is always, you know, the best thing, try just a kind of fixed risk reward ratio trade. And before you pick a pair, have a look at what the price has done previously. Has it trended previously? Has it kind of done loads of false breakouts? How has it performed with moving average crossovers? If you look back and say, actually, these moving average crossovers are pinpointed, not a bad way of doing it, then it's probably quite a good strategy to test out on those pairs. You can say, well, actually, yeah, it has been good, and adding that extra layer of waiting for oversold condition before I go in may well help me out. So try that out. have a look at that. Let me know your thoughts in the comment section below. Keep the risk manager, whatever you do. See you next one. Bye-bye.